Hi, Ron. It's Stuart here, and welcome to the new week. It's Monday, the 28th of July, 2025, and today we're going to look at a quick final scalping strategy that I promised you last twice we did these scalping webinars. My audio sounds a bit strange, so is it working? Let's just double check. Mary had a little lamb. Yes, it seems okay here, and I've got a new hardware setup coming in the next couple of days. I've got some new speakers and some new microphones and a new camera as well. So we'll see how all that looks when we get set up. So hopefully we'll have better, and I won't need these headsets on all the time. So anyway, let's get going. We talked about lots of different scalping strategies over the last couple of sessions. I promised you the VWAP, volume weighted average price, VWAP. Here it is here, and we'll do that today in the next 45 minutes, half an hour or so. It depends how long it takes to go through. So I've just added to my existing slide deck, so but just bear with me a second while I skip through to the VWAP ones. But remember, the idea or the art of scalping, lots of people get attracted to it. I won't bore you with me. Lots of people get attracted to it, remember, to scalping because of what it's perceived speed, and it seems quite straightforward. You get a lot of, as we said in our benefit slide here, you get a lot of real live charts, real live trades very, very quickly, unlike other approaches. However, because of its very nature of speed, doing lots of trades quickly on short time frames like the 1 minute or the 5 minute, or even the tick charts, you need to have your mental approach, your emotional approach absolutely solid and nailed down. So that's, as with any type of trading, that's the most important thing, in my humble opinion, for what it's worth. But also, there isn't such a thing as a holy grail. So VWAP has got very, very popular in the last few years. Obviously, it has very, very significant appeal. It's combining price and volume, so that sort of makes sense. Price action traders love it. It's one simple line on the chart. It resets every day if you're as an intraday trade, and that's what we're going to concentrate on today. It does have its benefits on higher timescales as well, but we're going to concentrate on the intraday approaches today. So all the risks and benefits we talked about of scalping is all included in today's webinar. I'm not going to go through all those slides again, but the principle of being a good trader remains the same and remains constant, and it always has been. It's all about you. It's all about finding something that works for you. And for many, VWAP is it. And for many, scalping is it. Not for everyone, okay? So is it for you? We shall see over the next half an hour or so. So any questions, obviously, please let me know. Stick it in the box. I hope you've had a good weekend. Weather here today in London has been quite nice today, or it is quite nice today, I should say. I love these late evenings and late nights. Those of you in Europe suffering from the heat and the wildfires, may God protect you all, and stay safe, my friends, wherever you are in the world. So let's crack on before we move on. So these were the other strategy we talked about in our previous session. We're going to concentrate on VWAP today. So let me just skip through to my, it was 53, I think, where the final start. We're going to we use pivot points a couple of times as well today. We'll look at Bollinger Bands as well. This is the final one we talked about last time, the AMA and the TEMA. So VWAP. So definition of VWAP, what is it? Well, it stands for volume weighted average price. Sounds a bit wordy, doesn't it? So, but it is what it says it is. It's the average price of an asset traded through the day in this case, because it resets on the platform every single day. I mean, you can anchor it. We'll look at that at the end for higher time frames and for swing traders, but principally it's aimed at intraday trading, taking the volume and the price of an asset. So it determines, I mean, the more liquid an asset is, the bigger the volume involved, the more realistic the price strategy is. So ideally, this is really aimed at high volume, high net worth companies. So big, large market capped companies in particular that have lots of liquidity and lots of participants. What's the biggest liquid market in the world? Well, it's the forex market. So you would think, you know, the forex market would be good for this. You can apply VWAP to the forex market. The only issue with forex market is obviously there isn't a central exchange like there is if you're trading on like the Nasdaq, or you're trading the DAX, or trading assets on those particular exchanges where there's a clear open and close of the day. The problem with the derivative market is 24-hour, not one of its problems, is one of its benefits. It's available 24 hours a day. And so with a derivative market that doesn't close, where's the peak volume? Well, usually when the real exchanges are open. So for instance, we're gonna concentrate on the DAX today, because that's one I've been trading today, one I've been looking at today. For this VWAP application, you can see how it applies. You know, so if you mark the open and the close of the actual live German DAX market on your charts each day, you get the real deep liquidity of the day. Obviously, the impact of the overlap of US opening that adds to more volume in the market generally, so that makes it even more applicable. So if you want to narrow your trading time to just when the deepest liquidity is, and when, you know, price and volumes are most reflective, that's when the deepest market, the deepest part of the market is. So when like Frankfurt and London's open, when New York's open, that's the deepest part of the market, that's the deepest volume, that's the tightest spreads, that's when you would really want to be trading. So VWAP is basically that, those two key components. We got price and volume. You know, whether you're trading directly on the exchanges, you're trading futures or contracts or options or whatever it is, or even, you know, with us with derivatives, it's all quite applicable. So it's really those two things combined. The other key thing about it is it's cumulative, i.e. adds up. That's what cumulative means. So that's why it starts at X at the beginning of the day and finishes at X plus 1 or X minus 1, or what, X minus whatever it is, the amount of movement we've had in the day. So it's cumulative. So it's typical price times volume divided by the cumulative volume during the day. So the typical price of each minute, each tick, is multiplied with the volume of that minute, and then the result is divided by the total volume up to that point of the day. Okay, so it's cumulative. So as it builds up, that's one of its drawbacks. We'll look at the drawbacks later on, but as it builds up, it becomes more, it's got more data to analyze. Basically, it's analyzing more data as it builds up during the day. So the key moments in the day where there's a big spike in volume, i.e. the open or the close, or a big high impact item, can really skew the VWAP. Okay, so that's a bit of a drawback we have with it. But if we assume that you as a scalper are following all the rules we talked about previously about what good scalping is, i.e. knowing when the high impact news of the day is, and you either don't trade around that big high impact news of item, or you have a strategy that deals with the news separately, that's all well and good. But you know, the VWAP, remember, is volume dependent. So the volumes on particular assets can go up very significantly on particular news items. So we've got a very high impact news week. We got the Fed on Wednesday, we got ADP on Wednesday, we got the weekly claims as normal on Thursday, and then we got non-farm payrolls on Friday. We got the end of the week on Thursday. All sorts going on. We've had Trump in Scotland this weekend, cheating on the golf course. But anyway, and holding court with Prime Minister Keir Starmer. Had to toff his brow and off we went to see him. He saw von der Leyen from the EU yesterday, an EU trade deal quite close. But anyway, lots and lots of news going on that can move the market, and hence it can have an impact on things like VWAP. And we've had a very strong trending day on the DAX today, which we'll have a look at in a minute when we have a look at the charts. Okay, so VWAP, it's price and volume combined. It's very simple line on the market on your chart. Are we above it? Are we below it? What are we? Are we trending towards it? Are we trending away from it? Are we just going sideways around it? All those things we can use to decide how we're going to trade it, how we're going to use it as a trading tool. Okay, so it's dynamism. It's real-time snapshot of the levels. It says there, you know, is one of its particular benefits. Okay, so very simply, I've already touched on this trend identification. Are we above it or are we below it? So prices above VWAP may indicate a bullish trend if we're moving away from it. Prices below VWAP may suggest a bearish trend as we're moving away from it. So it's a pivot point, if you like, a pivot line. I will show that on the as another indicator as well, but it's including volume, not just price. It was initially very much a development within the institution. So the big banks, the big insurance companies, the big fund managers, it was very much an institutional type tool that was used. It's been not mended, but it's been, you know, what's the word, democratized by the retail traders in the last few years. And so the institutions were particularly using it as a volume, because remember the big institutions, you know, if they're trading, you know, trillions of shares or millions of shares on a particular asset, a particular stock, or a particular future, you know, they can't hide it completely. You know, they try to drip feed their orders into the market. They don't want to move the market too much, but it was a particular tool that was used for institutional traders that I know personally as well, that use it in a very extended market. So, but a very overpriced or very underpriced markets. Literally on an intraday basis as well with those guys. Used it that way. So its simplicity, incorporating both price and volume, made it a big hit and an easy sell or easy sell for retail traders to understand, and particularly this focus on short-term trading. So let me just check. I've got a message here from somebody. Hopefully you can all still hear me. I always hate that when my phone's going off and I'm stood here talking to you all. No, it's okay. So there it is in a nutshell. It's very straightforward, but there's some drawbacks to it, which we'll come on to in a little while. So on your chart, so for instance, this was I just taken this snapshot earlier on today, around about the open of the US Open on the DAX, so the German exchange. So this this initial line here, this is the open last night, and the derivative. Obviously, there's no live trading in the DAX up until the big dotted line here. So the purple dotted line here is the live market, when the live German exchange is open in Frankfurt, where they're quoting prices. So here we are, 8 o'clock my time here in London to 4:30. In about 15 minutes time, the German market will close, and obviously the derivative market continues to be open, but obviously volumes are lower on the close and the pre-market session. So that's really when you want to be trading. The blue line here is when New York's open. So as I say, this is the actual open of New York when I took this snapshot, and that's the close of New York tonight, 2100 hours my time. On my time frame. But what can you see here? Well, you can see clearly the overnight we'd been trending higher into close on Friday. Overnight we opened positively. We had, these are 5-minute candles as well, remember guys. So big strong uptrend, consolidating here, big strong consolidate. So we'd moved much higher. But what happened? Europeans start the day. It's a Monday. It's the start of the week as well, start of a very busy week. And on open here, we had a first big down candle here around about 7:30, 7:45 or something earlier. So it looked like we topped, well, it was difficult to tell, but it looked like we could possibly have topped out because the size of the candles got bigger. And then we had three big red candles to the downside. Let me, it might be easier if I actually bring in the actual live chart, because I've got it here rather than trying to talk to this screen. Tell me if that's easier to see, everyone. Let me just make this. Yeah, that looks easier to get rid of the trading. Don't want that. Let's get rid of that. Let's get rid of the. I don't want the order panel either, so I don't want market panel. There we are. That's a wee bit, but there we are. So hopefully, yeah, hopefully that's a wee bit easier to see. So anyway, we'll come back to the slides in a minute, but that's what we're looking at. So this is Friday, 5-minute chart. This is the VWAP. The blue line is the VWAP, the volume weighted average price. Okay, so we've been above that all of into Friday's close. We're above that in pre-market, but that was our high. That, as we can see now, is clearly our high of the day there at 24,560 before the German cash market open. So there you can see the big down candle. Right. The other caveat I just want to bring with you on here, when I'm trading with the VWAP, I use it with Heikin Ashi candles. Okay. So remember, go back to the webinars on Heikin Ashi candles. Remember, Heikin Ashi candles, they're very clear. They're very the message is very, very clear. But again, they're not perfect. Nothing is perfect in trading. The price can be a long way away from the close of the candle, but they have a very clear message, and that's what we've got here on this first. Is that 7:30? That was, yes. So 7:30 this morning was a big down candle. And then it was followed through 5 minutes later by another big down. So that was negative, but then we had a green. So if you'd been short here, just on the candle changes, forget with VWAP at the moment because we're above it and we've been trending. So this could have been a retrace into the open. And if we'd gone higher above the pre-market high, we would have been buying here. In fact, we didn't, did we? What did we do? The real volume kicked in on open. It's a Monday morning as well, and for first 15-20 minutes we were big, strong, negative. These are really powerful negative candles for Heikin Ashi traders here in these first opening 15 minutes. So even if you hadn't bought back here or bought on the open, into this position, we were definitely short here 15 minutes into the open this morning. So we were looking for, you would have been looking for a take profit down here at the VWAP as it was here at this point. There's lots of other ways of trading this, but you can see, if we've gone short here on the red candles, got out on the green candles, got short again on the red candles, short again on the red candles. Possibly, we'll come to the trading the VWAP in a minute, but you can see here the first attempt at VWAP here by 10:30 this morning was a positive one. So we'd run into it, but we didn't touch it, did we? We didn't touch it, we didn't break it. So that's showing some support. Clearly buyers here at 10:20, 10:25 this morning, but it only lasted for 30 minutes, didn't it? So between 10:30 and 11 o'clock, or even 10:50 is when it stopped, and we've gone sideways again. So we'll be looking for a big negative candle here. So again, short there and looking for a test this time. So this time what happened? We breached it. We breached it here for the first time today at 12:30. So we could have done one of two things. We could have continued to decline, which we clearly have since then, or we could have bounced off it and moved up. We weren't sure what was going on, but what is the chart telling us at this point? Well, we've had big negative candles here on the open, a string down and a retrace up, but it hasn't gone above the high of the previous next leg low. The volume, we haven't got volume marked on here, but the size of the candle, the body of the candle is telling us that that's a weak day potentially still coming on. See what the reaction is of VWAP, and that's what lots of traders would have been doing here on the DAX. I was one of them. I've been short this morning, short here on that break, and not sure at this point what was going to happen. So we stalled a wee bit, but we did have we were red all the time, so out there, but then short here on the next candle here at which closed significantly south of the VWAP. Obviously, again at this point, it's a bit too early to say that we're going to continue this decline, but after a few minutes, it was clear that this was continuing to move. And then we got, I'm not sure why I've put that 1305 candle there. I'm not sure why I've highlighted that. Oh, I know. It comes back to other indicators. That is actually a break of the pivot point of the day. I'll come back to that in a minute when we add other indicators. That 13, so 1305, we broke the pivot of the day as well. We went under that. So, and then we followed through. See how strong that is? And then even if you'd got out there as we'd gone from red to green, see how small the body of the green candles are? Not much of a retrace. And then the downtrend continued and it got bigger and bigger. And there we go. That's 13. That's 1435. That should be on the next one. That's the open of the US of the market. That we not that screenshot, the first screenshot I took. So there's 1430. That's the US Open, and the DAX has continued to decline and decline. And we're finding now as we come into the close of the day. Remember, the purple line is the physical close of the German cash market today. We're seeing some consolidation. And we've been sort of sideways. We haven't punched a new low, have we? We're at 23,550 basically, or 53, just 3 points above that. But you know, we've been short all day, and thanks very much. That's the trend of the day, and that's the way you want to be looking. So it's been a successful intraday, strong trending day for the DAX. You don't obviously get that, obviously, but for the VWAP has been an assistance to that. As we've been short on lots of points on an intraday basis on the DAX. So that's my trading day in summary, basically, so far. And I'll probably be closing out any shorts I have just as the US, as the DAX day closes. Okay, we'll come back to this later on, but let me just get back to the theory of what we're talking about. So there's that first, that's the same chart here with the VWAP mentioned on it. And we're either, you know, we're moving higher above it here on Friday's close, and in the Asian session, in the for early part of the Asian session. But bear in mind that's pre-market as far as the DAX is concerned, and then short on open basically, and we continue to decline. There's been no major news today, hence there hasn't been some massive spikes in VWAP or changes in volume. Let me just bring the chart back then. You see what I've just said means. So if we zoom this in, you can see how the VWAP can kink here. So this was the close of the day. So the 23rd was the close of the day. Close of the day here, 2100. Moved down here during Friday, and there's the kink on into the close on Friday, and then there's the cash, well, not the cash open, but the derivative. There's Friday's close, and there's Sunday night's open there, 2300, and you see that we continue to move up. So we get these big kinks in VWAP on news and sudden changes in days and ends and starts of the day. Okay, so we'll come back to that in a minute. Okay, so that's the example. So as I've just gone through, this is what the words say here. So we can use VWAP for all sorts of things, you know, so support and resistance levels, you know, engage the direction of the market. Are we in a trending market? Are we in a consolidating market? You know, I mean, you can go up to your higher time frames and see what's going on, or you can just use VWAP to see where we are. So so if we're as we've just seen there on the DAX, if we're above the VWAP and we're trending higher, that's perhaps a trending day. If we use the VWAP as a, you know, if we've got overextended, we'll come back to that in a minute as well. For mean reverting times, but so we can use it as a support area or as a resistance area, whether we're going up or going down, depends what's going up. So it's a pivot, bit like pivot points, bit like support and resistance areas. During the day, we can use resistance levels and support levels as the price approaches or moves away from the VWAP. Okay, depending who's in charge, the supply, the buyers or the sellers. So classic support and resistance levels, VWAP can be used for it as well. Okay, there's a couple of other ways of using it as well. So we can use it as a pullback strategy. Okay, so have we got a trend going on, like I've just demonstrated? So we identify the trend. Have we got a trend of the day? What's going on? As we saw with that DAX example, we'd been trending higher in the pre-market, okay, and so that was fine. We were above the VWAP and we were trending higher. So that was all well and good. We saw it then turn on, didn't we? Then saw it. We saw it moving down. Okay, let me just bring in the chart again. This example of this one. So this on this one. So this one this morning, we had this this trend moving up during pre-market. On open, it was short. It looked like we wanted to be short, and then we had this trend into it. And although we didn't touch it, we got to the zone. We had a bounce off there, a pullback, but it didn't last for very long, did it? So we were up for 20 minutes or so before it ran out of steam. We didn't push high. We didn't get anywhere near the opening price action here at 11 o'clock, 2 or 3 hours after the open. We'd run out of steam, the small body of the candle. So that pullback worked for 20 minutes or so. So if you've been very strict, you've been short there, and gone long here on the positive green candle, long, and then out there, you would have made a few points on there. Nothing like the points we'd made on the open. Nothing going on. Next big bodied candle was that one, but mightn't be enough to get in. The key one was this move here. So again, we tested it and bounced off. This time you can see we've tested it into it here at 12.15, but the next one was the break, and that was another key selling point. So we're looking for a bounce off the VWAP as we were positive before then. Okay, so we're looking for a pullback at VWAP. So there's a buy if there's a bullish candle or a volume spike as we get to VWAP. And as we saw with that DAX example, it was we didn't quite get there, did we? We got a pivot candle. We got a small candle. We could have put volume on the chart as well and see if let's do that as well. Just add the volume indicator to our default chart here. So if we insert, we just add simple volume. Remember the volume on the derivative market is a little bit different. It's not, don't hold it as gospel, but as you can see the big volume here on the open as we've come into sorry, that was my VWAP, but there we are. So as we've got to the VWAP here, see what's it? Sorry, here we are. So the volume here wasn't particularly any bigger, was it, than it had been on this descent? So the down volume was still in play. We got to VWAP. There wasn't a particular spike in volume, was there? In fact, the volume on the rally up, so this is why volume can help you here, was weaker than the volume on the way down. So that was suggesting perhaps that wasn't going to hold, and that's exactly what happened. But also, again, see, compared to the open and the close, the volumes are massive, are not that significant. So again, bear that in mind. Remember, again, a lot of people use the VWAP around the open and the close of the market. Remember what these are here? This is our close. It's just coming into fit. This is our US Open. This is our open of the week of Europe, of London. Here. So what happened here? Well, we got to it, but again, there wasn't a volume spike, wasn't it? No particular spike. So the break of the VWAP was more significant than the pullback argument. So the pullback argument on this one hadn't worked today. So what we are looking for, though, with a pullback strategy is if we get into the VWAP, there's a big bullish candle or a volume spike. That's when we want to be buy. Don't jump in too quickly just because it looks like it's going to hit VWAP and assume it's going to bounce off it. Isn't always the case. Okay, look for other contributing factors. Okay, so you put your stop loss if you're using this strategy. Put your stop loss below the VWAP or the recent low, and take profit at the recent high if that had actually happened. And again, using the example from this morning here, but it wasn't. You shouldn't really have entered based on the where are we? What's my VWAP gone? There we are. Because we didn't actually touch it. We got to the zone. The trend was still down. It was just a retrace of this down leg, wasn't it? Is what's happening. So there was no reason to sort of buy that really. I mean, you could have done, obviously, because we did have 5, 10, 15, 20 minutes of a spike up, but we didn't get to any recent. We didn't get to the recent high. We certainly didn't get to the 9 o'clock session high, and we certainly didn't get anywhere near the opening highs, did we, on this bounce up? So what the story was telling you then, or obviously subsequently it's happened, but is that the bounce hasn't, wasn't successful. So you might have been out of that straight away. So expecting that. So it did play out, but not for very long, not compared to the gains we've made going with the trend to the downside. Okay, so that's the pullback strategy. And again, this is I've talked about identifying a trend, whether we're looking at higher highs and higher lows for the trend upwards. It's similarly if we were running below the VWAP and coming into it, so coming in using it as a resistance, a bit like we use the pivot point strategies approach. Okay, so that's the way to use the pullback strategy. The other one is the breakout, which is what we've seen. So we're looking for a move into and then breaking through the VWAP, or where we're actually sort of consolidating around the VWAP. The price is sort of in the range. The volume weighted average price is at a level that's in balance. So we've got this balance level that's going on. We've got this it's probably high lots of candles that showing the buyers and the sellers in balance. We've got lots of pivot type candles going on. We didn't get that this morning again with the DAX here. We got a clear break, didn't we? That's clearish. It was again, it was a big candle. It was in the direction we've been going all morning, and it was quite a relative significant break. We had a bit of a retrace for 20 minutes, and then we broke down, and then broke down and broke down. So you could have waited on the confirmation of this candle here, some 20 minutes later, creating a new low for the day as well. See that? You can see that the wick of that candle is lower than the wick of the previous, the big break candle. You can see the significance of the break there a bit more there on that 5-minute candle there. And then we continue to, so you could have added to your position here, and we've moved down. Just keep that one, this one in mind here, this 1305 on when we add the other indicators to it as well. Big move down here at 1330. Little retrace for 20 minutes again, then a full move lower into open, and then see what happened. The US Open, we just continue to trend lower, and you can see what's been happening recently into the close, the German close of the market, but consolidating at lows. So all the guys that were short here this morning will be closing out here, which is what these buys are here, and I'm one of those today, short DAX. Most of the day today. Again, there's guys that just trade this pre-open and the first 20 minutes, first 30 minutes we talked about trading the open, and then others that come around to trade the close, trading the US Open here. Again, you see the trend. So the trend, very strong trend day. The trend on the European and the London Open has been replicated on the US Open. So the market continues to decline today. I don't care why. I'm making money on it. Trend confirmation on strong trending days. I love strong trending days. Okay, so the breakout would be a breakout from the VWAP, as is not all sort of VWAP. So we're looking for a clear break, as we just saw there on with the DAX on that example, whether we got into buy or sell. So again, it works both ways, both above and below. Obviously today we've been trending, and the trend has been down. Tomorrow it could be the exact opposite. So we're looking for confirmation with a bullish or bearish candle, which whether we're going short or long, and our stop loss just trails us up or trails us down, as we've done today, on the high on the turn point. So today we could have had the VWAP, for instance, we could have had the stop loss just above the VWAP on the break of the VWAP. Sorry, takes a while to load. Sorry. But like today, we've gone short there on open. Our stop loss would have been up there originally on the turn in the market. There it is, coming in. That's against the trend train there on the break of the VWAP. Again, we've probably had our stop loss up there initially, and then pulled to VWAP as we broke under it, and then just trailed it down. Stop loss would have been there, here on this next entry there on US Open, and then again just trailed that down. Perhaps got out there as it's gone from red to green, but and certainly out down here somewhere on a very good, strong trending day. Plenty of points on the DAX for us intraday traders around the DAX today. So good day today. So that's the breakout of the VWAP, a bit like we've seen with pivot points or in our previous strategies, or the bounce from the we go back. So there's the breakout or the pullback. So there's a pullback, we bounce from it and pull back from it, or we break through it. Okay. And finally, an overextended market. So are we too far away from the VWAP? Remember what the VWAP is? It's volume weighted average price. So, average price, volume, we've got, that's where it should be. So we've got a bit overextended if we've got a bit excited. So we're looking for an overextension from the VWAP. So we can use other indicators to help us look for the turn point in the market, like we had with the, it just so happens the open of the day was our high point today, wasn't it, on that DAX example. But we can use other indicators like pivot points or like Bollinger Bands to help you confirm the extension. So a break out of the upper Bollinger Band or a break above, a pivot point area, whether it's R1 or S1 or 2 or 3. Could be a way of looking for the mean reversion on the day. Remember that we're talking about intraday strategies. Just because we've had a strong trending day on the DAX today, the example we're using, most markets, go in channels. They go in sideways. They tend to revert to the average. VWAP, by its very nature, by its very mathematics, gives you that as well. So we're looking for a buy or a sell on the extension away from the VWAP. So if we look at the chart we've just got on there, we apply pivot points, you can see what's happened. This is the same DAX chart, guys, 5 minutes. It's just going back 4 days into last week. So this is Friday's close. There's our strong close. There's a big hike up. So this is our standard R3 to pivot point and S3 to pivot point area. So we've got our 3 resistance areas, we've got our 3 support areas. So in the morning, pre-market, we were way above our pivot point, way above our VWAP. We'd above R1. We went to R2 in the Asian session. It looked like we were extending as far as R3. That didn't happen. And there's the, so we, again, you could have had, whoops. We could have had, actually, I'll dot this slide and we'll do it on the live one as well. So we could have had, a break of that as well on open. See what's happened there? On open, not only have we had a big down candle like we saw on the live chart, but we've had a break back through R2. So many pivot point strategists would have been looking for a return to certainly at least R1, if not the pivot area today. And that's, that's what's continued to happen. So they would have got to pivot point there, and that might have explained, the little tick up we saw early in the morning as we after the first opening flurry down on open. We've got back to from R2 to R1, and we've rejected it again. We've moved down. There's that test into the VWAP. We didn't quite get to the pivot point, did we? And that's that time frame. If I bring in my charts again, bring in the DAX, and we apply the, we add the, you'll see where that this 1303 kind of stuff. We then add the pivot point. So we're just going to put the pivot points as standard setups. You can see what's happened there. That's the pivot area. Actually, we just it's not that. Yeah, actually, let me make the pivots blue so you can change the color so you can see it a bit better. There we are. Yeah, a bit thicker as well. Well, actually, same color, unfortunately. But anyway, you can can see what happened at that 1203 chart now. Just reset that. So there's our pivot point break here, this 1305 one. In fact, it was a bit earlier than that, wasn't it? There's the pivot point of the day, the big thick blue line. I should have used a different color for the pivot point one. Let me change that, not to blue, because that's a color. Let's make it pink. Okay. There's our pink. There's the break of the pivot. So here we've gone. Here we've gone under the VWAP, and here we've gone under the pivot point of the day here. So that's that. I hope you can see that now. It's not to come out very well, is it? Let me get rid of volume, delete volume. Remove the volume there. Yeah. So it's just the pivot point area, the orange lines, and the main pivot point area of the day. So there's the there's our open. 8 o'clock, we continued down from pivot 3 to pivot 1. Sorry, R1, R2 to R1. Then we gone through the pivot point here at 12. Sorry, under VWAP at 1220, under the pivot point at 1305, and then continue to decline. There's the US Open, continue to decline, and here's the German close, and we're right on that 23,945 area at the moment. Okay. So that's the live charts of the literally as we're doing it there of that slide I've got there from my slides. Okay, so you know you see the decline there with the pivot point. We could have used actually, let's bring that on back. So if we take off the pivots, because that was a bit messy, wasn't it, the pivots? If we take the pivots off and just use remove that. So if we insert, sorry, if we insert, say, default Bollinger Bands, how does the Bollinger Band fit in? I don't know, to be honest. I haven't looked at it today. Have my Bollinger Band settings. Let's see what the settings is. 2 and 20, so it's standard. So how is Bollinger Band helping us? Remember, with Bollinger Band, you get an added indicator. You remember looking at this deviation. We're looking at 2 standard deviations from the price action. So this is still today. There's the beginning of the day. It was up, 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 up. There's the high of the day. There's the open on the what's happened here. Well, we're under here. This would, you know, at 7:30, a bit like we had with the VWAP. We got a big candle. The price candle still the same, isn't it? We're under the we're out of the upper half of the Bollinger Band now. We've crossed the midpoint. We've crossed the 20 period moving now. So that's a short position. We've touched the outside of the Bollinger Band. It's bounced back a wee bit, but there's that collapse on open, still in the under half of the Bollinger Band. Yes, we touched the extreme of the Bollinger Band, but we have one of those waterfall effects on the lower side of the Bollinger Band, which continue for open. So we had these big, strong candles. We eventually ran out of steam round about, not until here at 8:30, 8:40, before we went sideways, but we never got into the upper half of the Bollinger Band, did we? Never got over that midpoint. So we're still looking to be short. There's that bounce we talked about. Why isn't VWAP applied itself? There it is now. The thick blue line, remember, is the VWAP. So we had this retrace here at 10:30. But again, it would have kept you short, or Bollinger Bands are keeping you short, because we're not breaking away into the upper half of the Bollinger Band. We're consolidating, moving sideways. Bollinger Bands are sideways, that's suggesting consolidation. And then we got this break of the VWAP, the break of the Bollinger Band as well. But again, we didn't have a retrace back to the upper half of the Bollinger Band. We just had a waterfall effect as the price fell away from the VWAP as we breached it and then broke away from it here again. Remember that 12:30, 12:45. So the Bollinger Band has simply confirmed what we were looking at with the other indicators as well. So we haven't had a retrace yet. A bit of it sideways, but again, you see all day it's been a strong downtrend for the DAX today on Monday, despite the positive close on Friday. So it's been a down a day for stock markets, and we just, you know, as a trend following trade, that's the sort of thing I'd like to see. Okay. So that's VWAP with other indicators, Bollinger Bands in that particular case. Okay, so the problem with a VWAP, and I've just used I've just on the slide, so that's pivot points. Here we've just got the standard, one of my favorite indicators, the 21-year exponential moving average. So again, we've got the exponential moving average crossing the VWAP. So long there, short there. This, interestingly, it's exactly the same chart, guys. So we'd have gone short earlier, wouldn't be on open here, all the way up here, under the 21 EMA as well. Added to it on the break of the VWAP, perhaps added it to it here on the break of the as the 21 EMA has crossed below, from above to below the VWAP, and we've moved. Look at that. Look at the significance of that, or the degree of that fall. Looks too steep, but why fight it? You know, let's go down. So again, moving average has confirmed the trend, as you would expect, because it's a strong trending day. It's a bit of a bad example, but also you can see how it's, you know, this is another interesting one. The trend, you know, we've moved away from the VWAP here on late on Friday, and we continue to move up. Here we were sort of juggling around. You see how there's no direction in either the VWAP or the exponential moving average here. But we've had that strong move down, and we had this looping characteristic before we broke above it. So that would have been long, thank you, short here, thank you, short again here, thank you, and down we go. So yeah, as with all indicators, you know, they're not perfect. Don't use them in isolation. So exponential moving averages, excuse me, whatever it is you're using, don't be afraid to apply it. Okay, so it's not perfect. Nothing is perfect in the world of trading, my friends. It's all about you. It's all about risk management. Whoops, didn't mean to do that. There we are. So what's the problem with it? Well, if you, those of you perhaps paying attention would have realized its inherent cumulative nature makes it a lagging indicator as well. So it's a lagging. So again, that puts up lots of red flags for many traders. So they take the VWAP off altogether and just pure price action traders. You know, it's the way the numbers, the way it's calculated makes it, and it gives it a natural lag. So it's obviously it's dynamic, so it's adjusting with all the volumes we see, and we see if there's a big spike in volume that throws it out, we can have a big jump up, and suddenly the direction it looks like we're going in can suddenly be turned around. So obviously always make sure you've got your daily news indicator. It'll be jumping around all over the place this week. We get some big news coming out this week. So if you've got highly volatile markets like we've had recently, generally in the stock markets, for instance, you know, the VWAP can move quite viciously. Again, you've got earnings season, companies announcing results. So if you're using it on individual stocks, be careful around those news announcements. But you know, it can get a bit of a non-starter for that. So always be aware of high news impact events, and you know, have your live calculator running. You know, lots of people swore by it when it first came out. I know a lot of intraday traders, a lot of price action traders that thought this was their holy grail. The VWAP was going to be the thing. They put perhaps too much emphasis on its predictive qualities, not really taken into this idea of the lag. You know, and any sudden, as I've just said, any sudden impact or any big volume impact, because of its because of its cumulative nature, you know, it doesn't move quickly enough sometimes. So we, you know, just bear that in mind. So today, days like today, where there isn't big news going on, but you've got a strong trend going on, it, you know, it's a perfect foil for days like that. And it's you know, we've ran it up, ran it down. Perfect day. Thanks very much. Tomorrow could be completely different. The news builds up as the week goes on. So bear that in mind, my friend. So it's not perfect. No indicator is. And so there you go. The VWAP just about coming in time for a change, under time for a change. So I like it. I like it as an intraday. Not that that counts for anything, whether I like it or not. There's thousands of indicators, guys. Remember, it's all about you, as ever. Find what works for you. Nothing is perfect, and your VWAP has its lots of its proponents, but also some of its detractors are around its lagginess, as with all indicators. But they need the data before they can plot. So I'm a technical trader. I'm a technical analyst. I love my charts. I love my simple indicators, and VWAP fits into that category, certainly on an intraday basis. I use it when I'm trading short time frames, particularly on the DAX and particularly on the Dow. The Dow and the DAX are my two favorite intraday trading indexes. It works less well on Forex and on gold, I've found in my experience, but that's just my experience. So take it as you see it, my friends. So as ever, I finish all my webinars. My three favorite trading books historically: The Reminiscence of the Stock Operator, Trading in the Zone, and the Market Wizard series of books by Jack Schwager, Mark Douglas, and Edwin LeBeur, respectively. My favorite two books in the last couple of years has been Tom Hougaard's Best Loser Wins and Steve Goldstein's Mastering the Mental Game of Trading. Both of them focusing on you as a trader, you as a human being, and getting yourself in the right mindset, building on the work of Mark Douglas 30 years ago when he put Trading in the Zone in the bestsellers list. So thank you for your time, everyone. I hope that it's been of some use. Whatever strategy you use, always manage your risk and never get too down when you're losing, and never get too carried away when you're winning. It's a mind game, this business, my friends. And if you can master that, the world really is your oyster. Okay, so that's all from me from Monday night, Monday evening, Monday morning, wherever you are in the world. Thank you for watching. I will see you all again tomorrow. Take care, stay safe, and may the pips be with you. All the very best. Bye-bye.